Manage your credit cards wisely. This is one of the things I was just speaking about. You want to make sure that you address how much interest you're paying on a credit card. Give you an example, which is interesting. So if I get a secured credit card, we all know what that is, right? Yeah. Secured credit card, you put $1,000 up in a bank account, they give you a $1,000 credit card. You know what the average interest rate is on a secured card? 24%. Do you understand how high that is? This is on money that you gave them to give you credit, and they're charging you 24% off that credit card. So that forces you into, you have to pay it off at the end of the month, because that's too high of an interest rate to carry. You know, and I told you guys, I says, if you buy a home, like a high interest rate is considered 6%. The average mortgage rate is 3 to 5%. You know, and 5 is high. If you have anything, you know, over that amount, and they, once again, this is where they charge our community. That's how it can be. If you buy a $200,000 house, it could be the difference with you paying back $400,000 or $600,000. You know, it seems like it's only 2%. That 2% is daily, over 30 years that they're charging you, and it takes you an average of about 17 years just to get the principal down, where the balance actually is not all of the money going to interest, but the money actually going to principal. So that's one of the things that we want to pay attention to, is how are you using your credit cards, when are you paying it off, and what is your interest rate. The interest rate is one of the most important things that you want to be aware of. When you have good credit, they usually will charge you anywhere between 7 and 10% in interest rates. As if, you know, anything over 12 is considered medium, and anything over, a lot of credit cards, especially in our community, is 18 and up. When you go to college, the first thing they're going to do is Discover's going to be there. Every one of them company banks is going to be there, offering you a credit card for 22% interest rates. Why would they offer college students that? Because they know that they're either going to take advantage of you one way or the other, or your parents are going to pay it off for you. And this goes into once again, predatory lending. They're predatory lending you credit card limits, because they expect you to mess it up. And they're going to take advantage of you with the overdraft fees, with the late fees. You guys know what your late fees are on most credit cards every month? It's $35. That $35 adds up for being 1 day late. So, and there's a few other things that we want to always be aware of when we're dealing with credit cards. You know, if I remember correctly, I told you if you have a credit card and your due date is say your due date is the 27th of the month, you don't want to wait till the 27th, because that's when they make the most money. They want you to pay it on their last day or the day after, because they'll double the amount of money they're making interest off of you on that next day. But that day that you pay it, you gave them 30 days of interest. You paid 5 days earlier, you save money. You paid 10 days earlier, you save even more money. The earlier you pay it, the more money you save. And the less money you're giving them for utilizing that amount of credit.
So you can use that same, method when you pay for like your car insurance.
Your mortgage, your car insurance, not really, because they're not giving it to you. They're giving it to you based off of credit, which is how they rate how much they charge you with car insurance, but they don't charge you, you can be late with it, and they might charge you a $5 late charge, but it's not the same. When it comes to banking, you're talking about credit cards, car loans, mortgages, any of those aspects of it is a whole different aspect of how much they're charging you in terms of in terms of how much interest that they're going to take from you. Yeah. And just understand that banks are in the business of making money and taking advantage of as much as they possibly can. Their one thing is about monetizing as much as possible. And they do target our community for that on a consistent basis. They target the people who have the least power. They target the people who have the least money. You know, I don't know if you know it, but just to give you an example,